So Jane, if you wanted to close off your camera, and then we can, as we get going, because when we start, it'll just be me, and then we'll open it up to the two presentations and then the roundtable.
For question period, if questions come up in the chat, is someone monitoring them, or do we read them? And okay, good stuff. Thank you.
Yep. So yeah, if they come up while you're presenting, I'll ask them at the end.
Perfect.
Just it makes, depending on how detailed it is, I may ask it at the end of your presentation or save it until the end, but we'll,
Okay.
you know, I'll play it by ear.
Terrific. Thank you.
And what I'll do too is when you start, I'll hide my face as well, just so that there's just you talking to your slides. Just makes it easier.
Sure.
Okay. For those of you joining, we're just going to give it a few minutes. We'll probably start at about 11:31. Thank you. know there's still people joining, but we have a huge amount on our plate to present to you, so I don't want to delay it much longer. So welcome to our 6th installment of the Financial Literacy webinar series that is being co-hosted between 369 Global and the Canadian ETF Association. My name is Pat Dunwoody, and I'm the Executive Director of the Canadian ETF Association, and I'm thrilled to have a large group to be able to present to you so that we'll be able to answer any and all of your questions that come forward. Insurance can be a complicated item and thing to think about. Protecting yourself and your loved ones shouldn't have to be. So we wanted to take the mystery out of insurance so you can learn how it works, how it benefits you and your family, and make sure you get the most out of it. I'll facilitate today's session, and we have 2 presentations and then a panel of insurance experts to answer first questions that I have, and then we'll open it up to you to ask any questions that you may have. So we're going to start today with Anne-Marie Thomas, the Director of Consumer and Industry Relations at the Insurance Bureau of Canada, followed by a presentation by Brent Mizzen, the Assistant Vice President of Market Conduct at the Canadian Health and Life Insurance Association. And then we'll move into a panel discussion with insurance agents from Sun Life that will be able to answer specific questions. So with that, and I don't want to take any more time, so Anne-Marie, over to you.
Thank you very much, and welcome everyone. I'm going to be doing 2 presentations for you today. Super high level. The first one is on auto insurance, and the second one is on home tenant insurance. So I'm going to share my screen here now, and I hope that everyone can see that okay. So this is everything you want to know about auto insurance.
Anne-Marie,
yes?
we're not seeing your screen yet.
Oh, okay. I thought it was there. Okay, let me try it again. Share screen. This one. How is that? Are you seeing it
That
now?
works. Yes, that's
Terrific.
fine. Thank you.
Okay, terrific. Okay. So this is, a super high level about everything you need to know about Ontario auto insurance. So just to step back a little bit, Canada's private property and casualty insurance industry employs 130,000 people across Canada. Now that was in 2020. Insurance companies paid out a total of $42 billion in claims to victims of collisions, disasters, and other losses in Canada. Again, that's 2020 data. In 2020, Canadian insurers wrote $71 billion in direct written premiums for insurance on consumers' homes, cars, and businesses. And the insurance property and casualty industry contributed over $10 billion in taxes, levies, and fees to the federal and provincial governments in 2019. So how does auto insurance work? So drivers make payments to their insurance companies, and those are called premiums. And all of those premiums are pooled together to make up a collection of funds. From those funds, insurance companies pay out to repair your car or to pay if you're injured after an auto accident. So what does it auto insurance covers? Auto insurance covers sort of unexpected events, and it protects you from financial stress if you have to pay for car repairs or if you're injured, healthcare costs. In 2020, insurance companies paid out on average $161,500 to a person injured in a collision. That's not even including what they paid to fix the person's car. So on average, if a person was injured in an auto accident, an insurance companies paid out $161,500 in medical. So what do you need to know about auto insurance? An auto insurance policy is in essence a legal contract between you as the owner of the vehicle and your insurance company. They are typically for a fixed period time. On average, an auto insurance policy is issued for a year. And it's a policy of indemnities, or another word for an indemnity is like a promise. So the insurance company promises that if you get into an auto accident, they will pay to repair your vehicle, or if you're injured, to pay your medical costs. You promise that you will pay your insurance premiums. So it is a policy of promise. And interestingly enough, it's one of the few things in our lives we buy that we hope that we never have to use. So there is a myth that insurance is like a bank account that you can withdraw from to pay for your car insurance damage. And that's not true. Auto insurance should be looked at as a safety net to cover costs if you are ever in a collision. An auto insurance policy is not a maintenance policy for your car. There have to be very specific things that happen in order for an insurance policy to kick in. So that would have to be, you're actually involved in a collision, not for something like wear and tear on your car, new tires, oil changes, that sort of thing. That's not what an auto insurance policy is for. So one of the questions that we get a lot is, well, why do I need auto insurance? Well, the first reason is it's a law. Anyone who owns and drives a vehicle in the province of Ontario must have valid auto insurance. The penalty is quite hefty if you're convicted of driving without insurance. It's thousands of dollars, and in fines, and it's increased insurance premiums for years after if you're convicted. Another reason that you need auto insurance is that it protects your financial situation. So if we look back to what the average injury payout was, it was $161,000. Imagine if you had to pay that yourself. That could be financially crippling to some families. And having valid insurance protects your driving privileges. If you don't have insurance, you can have your license suspended. You can, as I mentioned, you can face hefty fines. So it's not worth it to drive without insurance. So how is your insurance premium calculated? There are a number of things that are taken into consideration in determining the premium or the rate that you pay. So one of the factors is you. So your driving history. So how many tickets, accidents do you have on your record? Where do you live? Because if you live in a major metropolitan area like Toronto, it's likely going to cost you more than if you live in a remote area with very few cars and very few risk of accidents. Your age will affect your premium, and the type of car you drive, as well as how you drive. So how many kilometers a day, week, year do you drive? Do you drive to work? You'll pay more for insurance than if you work from home. And the other rating factors is the insurance company that you're with, their overall claims experience. So what I mean by that is, how much has your insurance company paid to in total claims in a year? A company that has paid out more in claims than another company is likely going to have higher insurance rates than a company whose insurance payouts are less. So it's important to know, it's important to shop around to find the best rate for your profile. So what are you covered for when you buy an auto insurance policy? Well, the mandatory coverage that you have to have is a minimum of $200,000 third-party liability and accident benefits and uninsured auto insurance coverage. They're all purchased as a package. In addition to the mandatory, you can purchase optional coverage. So you have the option to buy comprehensive or collision coverage, and that is for damage to your vehicle. So comprehensive coverage will cover things such as vandalism, theft, falling objects. So if a tree falls on your car, you're covered. Collision will cover damage to your vehicle if you are in an at-fault accident. If you are in a not at-fault accident, your own policy will pay. You don't have to have purchased collision. Collision is only beneficial if you were at fault. So it's important to keep your insurance valid. So avoid getting tickets. Any speeding tickets, red light tickets, careless driving or impaired driving, distracted driving, all could play a part in the premium that you pay. So for example, someone convicted of careless driving or texting while driving, they could see their insurance premium double at minimum for years. So a ticket can stay on your driving record for up to 3 years, and the premium you pay for insurance may be increased for the length of time that those convictions are on your record. Since insurance is mandatory to drive in the province of Ontario, there is what is called the Facility Association, and that's where if you have too many tickets or too many accidents and no regular market insurance company wants to insure you, then you would go into the Facility Association, which is sort of a last resort, and it is incredibly expensive to get insurance. So tips for buying insurance. Most people say auto insurance is too high, and I can't disagree with you. So there are a couple of ways that you can look to reduce the cost of your auto insurance. So choose a higher deductible, and the deductible is typically on the collision and comprehensive portions of your policy. And what a deductible is the portion of a claim that you will pay. Typically, a deductible for collision and comprehensive is $500. So if your claim is for $4,000, you pay the first $500, the insurance company will pay the remaining $3,500. So typically, the higher the deductible that you pay, the lower your premium will be. Another tip to helping to control your auto insurance premium is shop around. Not all insurance companies have the same premium for the same driver profile. Remember I spoke briefly about insurance companies' claims experience. So you want to make sure that you're with the company that offers the lowest rate for your profile. So shop around, get multiple quotes, and pay the lowest rate that you can. There are some other ways that you can save. A lot of companies offer you a discount if you put your home or tenant policy with your auto policy. A lot of people don't know what discounts may be available to them. So ask your insurance company about discounts. Some insurance companies have group discounts based on employer or alumni associations. They may offer you a discount if you install a telematics device into your car. And what that is a device that monitors your driving. So if you have great driving habits, your insurance company may offer you a discount for simply installing a telematics device in your car. Most insurance companies will offer a minimum of 5% discount. So what happens if you need to file a claim? So you find your insurance card, call your insurance company's emergency claims line for help. Remember, if you're at fault in an accident, that at fault accident may cause your insurance premium to rise. And if you have any questions about your insurance, Insurance Bureau of Canada has a consumer information center that you can reach out at 1-844-227-5422. You can call there and ask any insurance question that you have. But if you have a complaint, the best thing to do is to start with your insurance company's ombudsperson. Insurance companies all have an ombudsperson that you can find on the insurance company website. And if your complaint is not resolved, you can reach out to the superintendent of insurance for auto. Thank you for that portion. I know it was very quick, so please don't hesitate if you have any other questions. And
Marie, just one thing, just a very quick question from somebody in the audience is if somebody gets a speeding ticket, but they didn't have points, would this still impact their insurance?
Yes, it would. It's occurrences that affect your premium. So for example, if you have 2 speeding tickets, but you don't get any points, the insurance company still looks at it as you have 2 instances. When you have higher points, generally the severity of the infraction is greater. And so for example, careless driving, that's always going to increase your premium because it's a more serious conviction.
And another quick one, and I may ask you to do your second part after Brent, just because we're getting questions. If a family member has a G2, do I need to include them in my insurance?
Yes, a G2 is a license, unlike a G1, which is a permit. So the auto insurance application asks you to list licensed drivers in the household. So since the G2 is a license, you should be letting your insurance company know that you have that driver living in the household who may drive your vehicle.
So even if they don't drive, it's that they have a license.
Correct, because the potential is there for them to drive.
Okay, and last question, and if you don't mind, we'll go to Brent because I'm conscious of time. One last question, how about parking tickets?
Parking tickets parking tickets, red light cameras. There are some municipal calming area cameras that issue tickets. Those do not affect your driving record because those are attached to your license plate, not your driving license. You still have to pay those fines, but they won't affect your auto insurance premium.
Perfect, thank you very much. So if you don't mind, we'll flip to Brent now.
Okay, and I'm going to stop sharing. There we go.
Great. Thanks very much, Anne-Marie. That was really helpful.
Okay.
Now, Brent, over to you.
Okay, thank you. So I will see if I can share my screen here. Does that look okay there?
It's coming on. It will be there shortly. I'm thinking it's thinking about it. It says, there we go. I've got part of your screen.
Oh, yeah, it's only doing part. Let me try that one more time. Just let me know if that comes up.
Thinking. There we go. Perfect.
Okay, so we'll run through. So thank you very much for having me. I'm Brent Mizzen, Assistant Vice President of Market Conduct, Policy and Regulation at Canadian Life and Health Insurance Association. So what I'm going to talk today a little bit about is one, the industry, what the industry does, and then we'll talk a little bit more specifically about some of the insurance products, and we'll focus mostly on life insurance. That tends to be one of the greatest interests, but it's certainly not the only one. So just trying to advance the slide here. So the first part, just a little bit about CLHIA. So we, the industry association, are not for profit. We're a member-based association. We represent 99% of the life and health insurance companies. And in terms of the companies themselves, there are 63 companies, and there's generally 4 types. You'll see there's 47 life insurance companies, and then we move down to not-for-profit healthcare providers. We also have fraternal benefit societies, and then there's property and casualty insurers that offer health benefits as well. And then I mentioned a lot of the focus of the talk today will be on life insurance. But that's one of 3 buckets. When you look at the companies, there's life insurance products denoted by gray. There's health insurance products denoted by green, and there's retirement solutions, which are denoted by blue. And if you look at the pie-shaped charts on the screen, you can see there's a wide range. Some go from fully gray, so focus on life insurance. Some have retirement solutions focused, and then others are a mix in between. So there is some variability in there. In terms of the coverage and benefit profile for the industry for 2021, overall in 2021, life and health insurers provided financial protection for 29 million Canadians and paid out $113 billion in benefits. So fairly substantial in providing protection to Canadians. And then if we look a little further down into categories, we see life insurance covers 22 million, and life insurance benefits payouts in 2021 were $14.3 billion. If we then take a look at health insurance, that covers 27 million Canadians. So again, very significant there. And that the benefits payout is $40.8 billion in health insurance. And in the next slide, we'll dig down a little deeper on the health insurance and what that includes. But one of the key aspects there is prescription drug coverage. And then the last category in the blue is retirement, which covers 8 million Canadians. And that covers, in terms of benefit payouts, 58.1 billion. You also see on the slide there that includes annuity payments on employer-sponsored or individual products, and that they have nearly doubled in the last decade. In terms of what an annuity payment is, that's a stream of payments that's guaranteed over a certain period of time. The other important thing that we'll speak to is group versus life insurance. And when we'll go into this in a little more detail in a little bit, but just in terms of how that breaks down, you see 66% is sold as group. Group you can think of in a couple of ways. Probably the classic example is group insurance is part of your employment benefits. Whereas for individual insurance, that's something you would buy, for example, to protect you and your family in the event of an unforeseen event. I mentioned we dig down a little bit more just in terms of the health benefits coverage. And you can see here clearly what your large portion is in terms of the blue category. And I mentioned that prescription drugs represent a fairly substantial portion of that at 13.4 billion. But the other coverage provided there is also really important. It includes dental, hospital, vision, massage, chiropractic, physiotherapy. Certainly mental health has become a very important component, particularly through the pandemic and as we make our way out of it. In the green, we note disability there, both short-term and long-term, and then accident and other. And other can include things like critical illness, long-term care insurance, and so on. So those benefits are very important to Canadians and provide a really important protection or safety net in addition to coverage they may have, for example, through government programs. Now we move into understanding a little bit about insurance, and Anne-Marie's presentation touched on some things that are similar between life and health insurance and property and casualty insurance, and then we also have some differences. So I'll try to highlight those as we go through. First, one of the similarities: insurance is a contract that provides financial protection against anticipated loss. And unanticipated loss is underlined there. Let's take a look at life insurance, for example. Certainly what you're trying to protect against for life insurance is an early or premature death, and you want to protect against the financial impacts that could be felt by your loved ones, for example, your family. There are different types of insurance. At the highest level, you can differentiate between public sector and private sector. Our industry is private sector. And then if we look at what the public sector provides, you can get insurance through the Canadian Pension Plan, or in Quebec, the QPP. Employment insurance, there's workers' compensation, as well as health insurance provided by the provinces. And then our industry and our members provide a range of products that provide financial protection. We spoke about life, pensions and annuities, disability, critical illness, long-term care, as well as healthcare and dental care. So a wide range there. In terms of principles of insurance, and this is important to understand when we consider life insurance, for example. Spreading of risk across large groups is important and offers a lot of benefits. And clearly the benefit there is a law of large numbers that allows you to insure a group that, if you were to underwrite someone only on their own and only consider their risk, it would be much more expensive and challenging to do it that way. So the law of large numbers is to our advantage. Premiums charged should reflect the applicant's risk. That's an important point. Also, you want like risks to receive similar premiums. In other words, if someone is a higher risk, they should be charged a premium that is similar to someone else that is of a similar high risk. And sort of flowing from that is we pool risks that are similar together. And that then feeds back to the spreading of risk across large groups. Clearly, one of the distinctions between, I think, life and health insurances and property and casualty insurance is the length or the duration of the risks that are being underwritten and protected against. So in our case, insurers' contractual obligations for life insurance, for example, can last many, many decades, 50 years or even longer. Think of somebody that's in their 20s or 30s, seeks out life insurance, and that insurance could cover till they're 80, 90, potentially even longer. So quite a long period of time. Pricing is typically fixed at the outset. And in Anne-Marie's presentation, she mentioned that they would have annual adjustments. The other thing that's important to note is that once in place, permanent life insurance remains in force until the death of the insured. Again, that points to the long-term nature of it. That's subject to premiums being paid. And the other important point here is to note that if you get insurance, it's a permanent insurance, it's in place, you're paying your premiums, even if you have an adverse information. So let's say you have a health condition that comes up, that doesn't affect your insurance. It continues to be in place. You can continue to buy the premiums that you have been told you have to pay, and that doesn't affect either the cost of your insurance or that it's in force. So that speaks to when an insurance company looks up front at assessing an individual's risk, they are doing that not just for that point in time, but also assessing the likelihood of risk throughout the duration of that contract. And so that brings us to what we hear the term underwriting or risk assessment. Another term that can be used similarly is classification. And in our case, how is risk assessment determined? Insurers will look at a number of factors. Age, certainly your family history, your health, your lifestyle, things like smoking, occupation, if it happens to carry risk with it. And they will come to a determination on what your risk profile is now and what it's likely to be in the years to come. The assessment is objective, and as mentioned in a previous slide, treat equal risk equally, and differentials must be valid or evidence-based. And then, as I was just mentioned on the previous slide, or the previous slide, premiums relate to your mortality or your morbidity risk in any future year. And then just referring back to group and individual insurance. So group insurance is provided through the workplace, could be a union or an association. And another distinction between group and individual is that there are different underwriting processes for them. For group, it's priced based on characteristics of the group as a whole, as opposed to the individual, him or herself. And there's a simplified risk assessment for that group. And it's typically designed as temporary coverage. So for example, as long as you're with that employer. Now, why do people need life insurance? I think one of the clearest objectives is if I am to die, for example, I want to protect my family from a financial perspective so that if I'm not alive, I'm not earning income, there's a replacement stream of funds that they can use to for example, support my wife, my children, and so on. There are other issues from a financial perspective. One would be to pay off a loan or a mortgage that may be associated with our financials. Charitable gift is an aspect that people will use life insurance for. And there's also another example would be equalizing bequests. So for example, here we know a daughter gets the family business or college, and the life insurance could go to a son, for example, so that they have equal financial benefits. I think this, in terms of why you need life insurance, it is ultimately a personal decision about what and how much you need. And it can vary from individual to individual, but the important aspect is that it is there to protect you and your loved ones. And I just touched on how much insurance is needed. That's a very common question. And we'll go through a few aspects here, and this may be an item for discussion later, but really what you're trying to do is estimate the potential of financial loss if you are to die. And how you do that is you do a needs assessment. So what income and capital needs exist after your death? And then what income and capital sources will there be? And then life insurance is intended to fill any shortfall between the needs and the sources. And so this will depend on a whole range of factors. So it can be your age, your number of dependents, your obligations, as well as personal choices of how much protection you want to provide for loved ones. There are a number of rules of thumb that I've heard. Some have suggested you could need 10 times your salary. So for example, you make $50,000 a year, you could look at $500,000 in life insurance. So, but there's no one set rule there. It's important to really do an assessment and see what makes sense for you, and financial advisors can be very helpful in that respect. Then if we look at types of insurance, I think the two most common categories, if you will, one is term insurance. And as the name dictates or sort of suggests, this is for a certain period of time. You can pick 5, 10, 20 years to cover a certain period of time. One of the common reasons this is looked at quite closely or is beneficial to consumers is it is a cost-effective method or has low cost and covers a period where there's risk. For example, when your children are young. It does provide minimal or no savings element. That's an important element. And it usually contains a right for the policyholder to convert to permanent insurance or coverage without a newer risk assessment by the insurer. And versus permanent insurance, it's more straightforward, I would say. So if we look at permanent insurance, this meets lifelong protection needs. So in addition to death protection, it has cash values that are accumulated and can be used for financial emergencies or supplement retirement income. And premiums can be paid over a set number of years or for life. And two of the common elements referred to here are whole life versus universal life. And in whole life insurance, the insurer takes on both the risk related to death and the underlying investment risk, whereas with universal life, that allows consumers to select and change premium levels and investment options while the insurer assumes the risk related to death. So that one can be more complicated and can be more costly upfront. And with that, I will stop sharing my screen and turn it over to the other speakers.
Brent, we have one question that has come in,
Okay.
and it's asking if any kind of driving history or history like that would impact life insurance premiums.
I'm not aware of, now, the only thing that comes to mind there is anything that is, if you are doing racing as a profession, which carries risks there, but not if you have been caught speeding, for example.
Perfect, thank you. Okay, so thank you very much, Brent. And now if Brent can go off screen, and we are going to bring in our panelists. Ivan, Jane, and Mathura, I'm going to ask you to introduce yourselves briefly. It stops me from actually having to pronounce names, which I am terrible at. So Ivan, we'll do Ivan, Jane, and Mathura, and you can introduce yourselves, and then I'll start asking the questions.
Thank you, Pat, and hello, everyone. Thanks a lot, for connecting today. My name is Ivan Arturo. I'm a certified financial planner, and I've been in the business of financial planning for the last 15 years, and I am associated with Sun Life Financial.
Jane?
Yes, hi, everyone. My name is Jane McMillan. So I have been with Sun Life for the last 8 years. I'm also, like Ivan, I'm also a certified financial planner. So I'm quite focused on helping families and small business owners to build a strong financial foundation and grow their wealth. Thank you.
And Mathura?
Hi, everyone. My name is Mathura Thirubamarikan. I've been a financial advisor with Sun Life for 8 years now as well. And I'm happy to be here.
Great. So we're going to build on what we've just heard from the two associations with probably some real life examples as well. So Ivan, we'll start with you. And what is insurance at a high level, and why does anybody need it?
Well, you know what, we have already heard, a few times, from Brent as well. Insurance is just to protect, your major asset. Like, insurance normally is a contract that is between the consumer and the insurance company, and which is normally paid by premiums. And those premiums is just in exchange, for you to receive financial compensation or reimbursement against any loss. Can be, like what he mentioned before about a casualty insurance, which is car, but also in our business more for illness, injury, or any premature death. Normally, all these premiums are paid to the insurance companies, and in our business, the majority of the cases is just to protect that income, and you want to make sure that you want to keep, or the family members, you want to keep, the same lifestyle in case of it were to happen to any of your family members. Right. So it's basically a contract between insurance and the consumer.
And that's the same for any type of insurance, not just life insurance?
It can be for any type of insurance. And I think your question was, why do we need it as well? Yeah. So insurance is just, to protect, I tell clients is to protect your major asset. Like sometimes when I ask these questions, I say, what's your major asset? And sometimes people say, oh, my house, maybe my car. But actually that's not your major asset. The major asset that everyone has is the ability for you to generate an income. And that's why people have insurance, just to protect your family against the loss of that income. So we normally, when we create, financial plans for our clients, we recommend insurance as part of your overall solid financial plan for, for the families, even also for business owners. So we want to make sure, that you have, that protection in place, because you need to protect what's important first, which I mentioned before, is your ability for you to generate an income. That's why, we normally recommend clients to have, protection in place before moving on to any wealth management or any savings component of your financial plan.
Great way to look at it.
Yeah.
Jane and Mathura, do you have anything to add to that?
Yeah, one thing I want to add is, life is quite the unexpected events can happen, right? So I remember I had a client came in with his husband, and his husband is much younger than she is. So we were even like joking, we said, oh, like the husband said, oh, I have to change your diaper one day. But last year I got a phone call, unfortunately, from my client. Her husband passed away due to heart attack. So fortunately at the time when both of them came in, meet me, and we locked in life insurance for her husband as well. So she was able to receive a claim check and use it as a down payment for her new home now. So just want to, say it's we need to protect ourselves before we move on to any solid financial plan.
Mathura, is everything covered?
Definitely. Like talking about life insurance, it's always one of those things we don't want to talk about because it's a very difficult conversation to have. But it's always best to plan when things are good, just to have security when things do go bad, right? So it's an important conversation to definitely always have.
Absolutely. So Jane, the very easy question, how much does somebody need?
Oh yeah, so I think Brett talked quite a bit about how to calculate the coverage amount. So if we're talking about life insurance, I think the key is you need to think about it. You're buying life insurance not for yourself. You're buying it for your family, right? For the people who depend on you. So ask yourself, what if something will happen to me? What would my family need? So the common things we would consider is, how much annual income the family will lose, right? And how much is the family expenses at the moment? And how much is your mortgage and the loan and the debts? And also estimate what would be the tax liability come, into with the death. So, and the funerals and other final expenses. And also we take into consideration how much is the existing life insurance coverage you have, right? So as Brett mentioned, the general rule people talk about is, 10 times of your annual salary. That's all good. That can be like a basic, calculation you can do. But also most of the life insurance companies have an online calculator you can utilize. And it walks you through the process, and so you can come up, a pretty solid number, and you can, use as a guideline. But if you have like extensive family, you have a business as well. If the situation is a bit more complicated, I would recommend, work with a financial planner, do a needs analysis, and have a more comprehensive sort of calculation to help you out.
A great idea. The last presentation we had was about estate planning, and it was very clear that insurance pays out rather quickly, so that you think you have the money coming from the estate, but it could take 6 months to a year before you get that. So if nothing else, the life insurance could be that cushion to get you to when the estate is paid. So that's also something to remember. Thank you. So Mathura, Brent did speak about the difference between whole life and term, but how does somebody decide what they should use?
So I always like to ask the question, why do you want this insurance? Do you want it for when something happens, or if something happens, right? Oh. So if they say something like, I want this coverage for when I pass away, that my family is taken care of, that their funeral cost is taken care of, that I'm passing a legacy on to my kids, or I want to donate funds to like a charity or things like that. And oftentimes permanent insurance would solve that problem because permanent insurance, because of there is no expiration date, we know that for sure there will be a payout, right? If they respond back and tell me, you know, I want to make sure if I pass away, I want my mortgage to be taken care of, or if something happens during X amount of years, I want to make sure my kids are taken care of, my family is taken care of, my income is replaced, then oftentimes term insurance might make the most sense. Term insurance, I like to think of it as to protect a need that's temporary, right? So a mortgage, for example, if you get a mortgage today, 10, 20 years down the road, the hope is that we'll pay down the mortgage, right? So you won't need that huge liability. So you don't need that amount of coverage for life. So you might only need it for a duration. So term insurance might make sense. Or if you have young kids, again, 10, 20 years down the road, if they're in their 20s or older than that, they might become more independent and less relying on yourself. So you might not need to have insurance forever, right? So it really comes to whether if it's a temporary need or a lifelong planning need, that kind of impacts whether you need term insurance or permanent insurance.
Ivan and Jane, do you have anything to add to that?
I guess, something to mention in that is that insurance proceeds are tax-free benefits, because sometimes people ask, is that insurance proceed taxable? Do I have to pay taxes on those proceeds? So under the Insurance Act, all insurance proceeds are tax-free. So people don't have to pay any taxes on the amount that they receive at time of claim. That would be something very important to consider.
Yeah.
Great. Okay. So Ivan, back to you. What is the difference between group insurance and personal insurance? And does somebody need both or one or the other?
Well, I guess, group insurance is normally offered, to the consumers, as part of your compensation package when you're working for a company. And it normally provides, health, dental, life insurance, and also disability protection sometimes. However, when it comes to the life insurance protection, normally is not enough coverage. So we normally recommend clients, to have an individually owned coverage just to top it up that benefit. Normally, through the group benefits, you have about twice your salary. So if you're someone who's making, let's say, $50,000 a year, then the life insurance protection through the group is only $100,000. But in case you have a family members, you have kids, you have a mortgage, $100,000 is not going to cut it, right? So the problem relying on group coverage is that coverage goes until the age of 65. That's number one, because that's when you get retired, and then the group benefit is gone. And no one guarantees the insurability factor, which is your health. So when it comes to insurability means, like there is a moment in life that you're insurable for you to get get coverage. And there's a moment in life that you are not insurable anymore. And that becomes because of your health. So if you have any health condition that you won't be able to qualify for the policies anymore, or it's going to be very expensive for you to pay for premiums. So that's why we normally recommend clients, you should have on top of your group benefit, which is great that you have, try to have your individually owned policies such as life or maybe critical illness, just to actually compensate to make sure you have, all the overall coverage through the group plus the individual plans. And keep in mind that normally when you're working for a company, the company sponsors those plans. So it's great to have them, but do not rely on them 100% because most of the coverage are not enough, specifically, for you, for the family needs.
Ivan, a question just came in and I thought instead of waiting till the end, I'll ask it because it ties it in. Is group-related life insurance only pays to the client who passes away because of his work? It's not related with work I apologize, person who's asking the question, with work unexpectedly as well.
I think if I understood the question correctly, I think the member is asking if someone passes away and it has to be a work-related death that needs to be paid. The answer is no. It can be for any type of death. So you have, the group policy to your employer and you have a life insurance. If there is any death, caused either at work or off work, the insurance company should compensate for that. So yeah, so it doesn't matter. Maybe they're confused maybe with the workers' compensation, which is the disability benefit they have at work. And that's only for work-related injuries, right? That's a different, part of the compensation.
Athena, anything to add or we'll move on?
Another thing is to not rely on group company as well, just because they can always change their mind. They can always decide to cancel the group plan as well. So then you no longer have coverage, right? So it's always important to think of it as like gravy, like the work coverage that you're getting through your group. It's always good to have your personal coverage as well.
That's a
Yeah,
very
and
good.
also, yeah, sorry, yeah. So also, I mean, the work landscape is quite different nowadays, right? Like my father-in-law worked for Ford Automobile his whole life, but nowadays my daughter works for 3 different jobs, and none of them a permanent position, right? So we have to take things into our own control and have our own insurance.
Yeah, that's very true. So Jane, we've heard the word insurability mentioned. Can you walk us through what that means? And I mean, tie it maybe to some of the TV commercials we see about, you know, buying insurance. Anybody can buy it, anybody can get insurance regardless of health.
Right, right. Yeah. So are you insurable? Typically, it means, you know, will you be approved for the insurance application, right? Are you insurable? So this is often, it's very individual based. It's very much based on your age and your health condition. I mean, different products have different requirements. Like for instance, you know, certain clients, you know, have certain health conditions. They can be approved for life insurance, no problem. But they may be declined for critical illness insurance, right? And also certain products like a term life insurance, if you're applying for term 30, you know, if you're over age 55, some companies you may be declined. So keep that in mind. There's no, you know, certain like this one simple answer to this question. The other thing is you want to lock in your insurability, meaning sometimes, you know, if I know it's very hard to decide between term life insurance or permanent life insurance because the cost can be so different. And, you know, when you're at a young age, you know, you need a large amount of insurance coverage, right? So it is very helpful, you know, you apply for term life insurance and the premium is low. But the benefit of having term life insurance at that time, if you can't afford permanent, is also because you are able to lock in your insurability, meaning down the road, if you know, your budget change and your situation change, you want to have a permanent life insurance, you can convert partial of your term life insurance into a permanent one without any medical underwriting. So that's called a locking insurability, which is very important. Well, back to the question you answered about those commercials.
Yes.
It's very hard to say. I think the question you need to ask yourself is, you know, if you were diagnosed with life-threatening, you know, critical illness, do you think you will be insured for life insurance, right? Insurance companies are all about assessing risks. So how much risk those insurance companies are willing to take and at what cost? So so I would say it's, you know, always reach out and to try and get an assessment. But when you're healthy, you know, plan ahead.
Yeah, that's a very good point. Very good point. Anything to add before we move on? Or Ivan? No?
No, I think, you know, we mentioned already about the underwriting process. And normally when we submit an insurance application, we go through a process called underwriting, which we already mentioned. And that's when we assess all the risk. So what Jay mentioned is, you know, basically, if you are young and healthy, as long as you are in good, you know, health, go ahead, don't think it twice, try to go and apply for insurance. And I always tell the client, you know, there is no best insurance products in the market. You have to make sure, you know, that the best insurance for you is the one that you can afford and that you can qualify for. that's the best insurance for yourself, right? Then down the road, you know, the finances might change. They might be able to upgrade your policy. You might be able to convert it, like what just, you know, Jane saying mentioned that you can go, you know, we can convert a policy to a permanent policy with, you know, with no medical evidence. So all these things can happen, but as long as you're healthy, try to buy as much as possible, because, you know, you will find yourself that you did it in the past. That I would say that it's very important, you know, the insurability factor in this matter.
Yeah, that's a great line. Yep. Okay, Mithura. If I own my own home and I have mortgage insurance that I got when I, you know, from the bank or the financial institution that I got my mortgage from, do I need any other kind of insurance?
So with the banks, so the banks always have to ask you to get mortgage insurance, right? Because they're giving you a huge loan. So they want to make sure that if something happens to you, that they're getting their money back, right? So there is a difference between mortgage insurance at the bank versus getting like a term insurance to cover your mortgage. The mortgage insurance at the bank is considered like a decrease in coverage. And what I mean by that, so say you have $500,000 in your mortgage, and they say your premium, your mortgage insurance premium for that is $100. Every month you're paying down your mortgage, so your balance is decreasing, right? But you're still paying that $100, that same $100. And if something were to happen, say when the balance is now $200,000, all the bank is going to do is pay off that balance, right? So whereas if you were to get a term insurance to cover that mortgage, it's a level coverage, meaning if something were to happen down the road, your beneficiary would then they would get the full $500,000. They would then decide whether they want to pay off the mortgage balance, and they can even keep the remaining for their lifestyle and ongoing expenses. So it's more beneficial. Mortgage insurance, we shouldn't only think about life insurance or term insurance or mortgage insurance to protect your mortgage. So that's considered so another thing to consider is critical illness insurance or disability insurance. Because critical illness insurance, disability insurance is a living benefit. So while you're alive, if you're ever sick or disabled or injure yourself and you're off of work, you need to have like an income replacement, right? So critical illness insurance can help you with that. So, you're able to get a lump sum payment to cover. So if you're off of work for a few years or even if it's a short period of time, at least it gives you that ability to not worry about your financials and to focus on recovery.
Is there a difference in cost between mortgage insurance and term insurance? Or is it a depends again?
It's a depends situation, but oftentimes from what I've seen, term insurance is a lot cheaper. Another difference between mortgage insurance at the bank versus term insurance is that at the bank, the bank is actually the beneficiary, right? So whereas if it's a term insurance, your family is the beneficiary, and they also do something called post underwriting. So at the time of application, they just ask you maybe like 5 or 6 yes or no questions. And at the time of claim, that's when they start doing the underwriting, and it causes a lot of issues and problems a lot of times. Whereas with an insurance company, we do all our underwriting upfront. So it's all black and white, it's the contract, so there's more peace of mind. And if you were to sell your property, or if your mortgage comes up for renewal, you don't have to constantly keep reapplying for mortgage insurance just because this is on your life, opposed to it being on the actual mortgage.
Okay. So a question has come in, so I think it's appropriate to ask now, is it mandatory to have house insurance or to get house insurance when you're applying for a mortgage?
It's not mandatory, but it is always advised.
So the bank isn't going to insist on it?
They shouldn't.
famous last words. Okay, so
but they do have to ask. They do have to ask.
They will ask.
And they
Okay.
shouldn't. Yeah, it shouldn't. Yeah, but I know they might like pressure you.
So I guess, you know, in that question is, you know, we normally ask clients to get insurance from a licensed insurance broker or licensed insurance advisor. And sometimes, you know, people that offering, you know, the mortgage, they are not life insurance licensed. They work for the mortgage, maybe they have a mortgage license, but they don't have a life license. It's just maybe a part of the process that they're doing at the bank. They need to offer that product, as a mortgage protection, but the consumer has always the right to waive it. Like there is a document called a mortgage insurance waiver that you can sign, say, you know what, I'm opting out of the insurance because maybe I have something else through a life insurance company. So it's always recommended, to check the difference between the two, like what Mitra just explained, and then you make your own decision.
Great. Okay. And so Ivan, what if I don't own my home? What if I rent? Is insurance?
Well, I mean, yeah, well, I think, insurance, as I mentioned before, is not about, would you have an apartment or you have a mortgage? Yes, you need insurance. We know that. But when it comes, let's say you are renting, if you have a spouse or you have children, and even though, you don't own a home, you need to have insurance. It's like it's a part of the overall financial foundation for our clients. So if you, I think, I treat insurance as an act of love. Basically, that's how I say insurance is an act of love. If you really love your spouse, if you really love your children, you need to have coverage, because if something were to happen to you in terms of any death, premature death, any sickness or any illness, you want to make sure that you're able to put food on the table. You want to make sure that you can send your kids to school, because maybe that's one of your goals, and you want to make sure that your income is replaced. Because what if there are no protection in place? What's going to happen to your family, finances? What's going to happen to, how about the dream of you saving enough money to buy a home? That you don't have that protection in place, then all these goals are going to go into the drain. So that's why, it's not about having, like you have a house or you're renting. No, if you have a spouse and you are, you have children or dependents, you need to have insurance. Insurance, I would say, is an act of love. It's not for the people, for yourself. It's for the people you leave behind.
So can a landlord insist on you having some kind of insurance? I think it's content
No.
insurance or something. No. Okay.
Yeah, maybe, yeah. So maybe the question is, is there are like two policies when it comes to that. So there is, I think the content insurance or the tenant insurance. That's a different topic, which we're not licensed to discuss. But I mean, that's the content insurance. That's just to protect the things that are inside the house. And landlord normally asks for those insurance, but that's not our expertise. What we're expertise more about the life, the life insurance. Mm-hmm.
Okay, great. So those are our standard, the standard questions I've written down. And so we can invite Anne-Marie and Brent to come back, and we've got a few questions that have come in. So whoever wants to answer, and then we can go round table. So the first one that's come in is, if somebody hasn't any insurance at a retirement plan, what kind of income does a Canadian get from the government? So I guess it's more replacement income. So does the CPP and OAS, is that sufficient to retire, or should there be an insurance plan going forward? Who wants to take that?
I'm happy to say a couple words to start the discussion. And I think in part, like many of the other answers here, it starts with it depends. And what I mean by that is what you get out of CPP or QPP is based on a couple of factors. One, how long have you paid into it? And two, what income level are you earning? And so there are different approaches as to how much income you need as replacement income in retirement. We certainly have some financial advisors, planners here, so I don't want to speak up for them. But I think it's fair to say that as your income changes from low to high, the amount of income you may need to replace also changes, because government programs will provide a base amount. But as you get to higher levels, you will need to supplement that if you want to maintain your standard of living in retirement. So those would be my initial comments, and I will leave it open for others to comment.
Yeah, so I'll jump in. I would say, yeah, so all the government benefits, such as, all the age security and the CPP, those are just made just to replace at least 30 to 40% of your income, basically. And then, that's why, we encourage Canadians to start saving as young as possible, so you can have that compound effect in your investments. So when you reach the age of 65, you don't rely 100% on the government benefits. You're able to have the government benefits, maybe just to cover just the very, very basic basic needs, but then you want to have enough funds maybe for lifestyle, maybe you want to, you want to travel, maybe you want to, you want to be able to cover expenses related to your health, then that's what you need to make sure that you have investments. And here in Canada, we have, TFSAs, we have RSPs. So, and also you have companies sponsor pension plans. So you will be able to use all these plans to make sure that you are, using that on top of the CPP or the QPP or all the security. So we encourage every Canadian to start as early as possible, so that way you don't rely on the government benefits only. It's great that we have them. We're very lucky to live in Canada because we have those benefits, but the majority of the cases, that's not enough.
I'll give it a second after each question to see if anyone has anything to add. So another question that's come in as if somebody owns a small business, what is the best way to make insurance, have insurance for that, if they are the sort of the single or the sole owner, if it's a family business?
Yeah, so if I can take a stab on that. So for business owners, you are able to get a life insurance under the name of the corporation. So the idea is, if the corporation has any debt, or if the corporation has other shareholders and you want to do like a shareholder agreement funding, that the payout can fund those needs. Sometimes there's only, if a small business only has one shareholder, it's also possible to have the shareholder insured and also the spouse as well. But the tax treatment is slightly different, but that's something, probably, you want to talk to your accountant to get more details on that.
So again, it would be more insurance on the individual or the people that own the business, as opposed to insurance on the business itself.
Right. Yeah. So yeah, we're talking about life insurance. Yeah.
Okay. So another question that's come in is, I am a full-time student, but they want to obtain insurance for themselves and their family, such as health insurance. What would that look like? Is there, and I know most of you may not be able to answer, but is there something, I guess that's critical life that they're referring to?
It could be critical illness, or I'm not sure if they're referring to like personal health insurance, so like health and dental coverage. But yeah, it's just, we would just sit down with them and do an application, help them with the application.
Perfect. Okay. So Ivan, you did mention, and I just mentioned too, the critical insurance, and I know you don't sell it, but maybe somebody can walk us through what critical illness insurance is, just so people can get their head around if that's something that they should have, like the kind of person, if you're working for a business or do you own a business, what kind of person should have critical illness insurance?
Okay, so I can jump in. Okay, and maybe, either Jane or Mithra can, also let me know. So critical illness insurance is an insurance coverage that you pay premiums to the insurance company. And in case of any diagnosis, such as cancer, heart attack, a stroke, any heart condition, the insurance company would pay a lump sum payment. That lump sum payment comes to the individual, and that would be money going to them tax-free. Now, as we know, when you're working for a company, you might have group benefits, so you might have maybe some disability insurance, which is only an income replacement. So when I say income replacement, means they're just covering between 60 to maybe 70% of your income through the group disability coverage. But there is that 30% gap, between the 70 to go into 100. So that's what the critical illness, comes very handy, is to cover that gap. That's number one. Number two, and I'm sure many of the audience, maybe they have a friend, they have a family member that have been going maybe through cancer situation, which is very common. And most of the, of the insurance companies through work, or maybe, through the province of Ontario, there are some expenses that are not covered through OHIP or through the provincial insurance, or even through the insurance company. And you need to make sure that you have enough financial resources to cope with that illness. So the critical illness gives you that lump sum payment just to cover that expense. That's number one. We'll be able to close the gap on your disability insurance. That's number two. And then it gives you that financial peace of mind. So you don't focus about how am I going to pay this? Now my mortgage, now I have to send my kids to school. What's going to happen to my retirement? I have to pull out money from RSPs. All these things have a lot of financial, impact on your family. So you have that critical illness insurance, it pays a lump sum payment, let's say 100,000 or whatever you buy, and then you're able to get that money, and then you can cover all these, financial expenses. And all you need to do is to focus on your recovery, which is what's important when you're sick in an illness like that. So that's what the critical illness insurance is. Just gives you that peace of mind. It is a living benefit, like you get it when you're alive, right? You can use that money as you wish. It is not a reimbursement program, because some people, think, okay, I have to get expenses and then get paid. No, if you buy $100,000 of critical illness insurance at time of claim, if you're approved for the claim, they give you the check, and then you can use it as you wish. And then you can, cover any expenses. The majority of the cases for you just to focus on the recovery. So that's the reason why we have, critical illness insurance. Extremely important. We recommend it to all our clients, because we cannot rely only on disability protection, because disability is only to replace your income. Critical illness will be like a top up, on top of the disability protection.
Anybody want anything to add to that?
Yeah, I just want to say, like life insurance and critical illness insurance, they go hand in hand. They're both equally just as important. And just because you have group benefits, that doesn't mean you automatically have disability insurance. It's not mandatory for companies to sponsor that in their package. So which makes it even more of a need to also look into critical illness insurance, just because like with the way our lifestyle is going, I mean, knock on wood, we hope everyone lives well and has a healthy life, but anything can happen at any time, and you just won't always want to have that protection. And oftentimes people come to us when something happens, which at that point it's too late, right? So you want to have that discussion when you're young and healthy.
Very good answer. There are no more questions in the queue. I'm looking at all the speakers. Is there anything, after listening to all the presentations and the conversation, that you want to just stress or to add that either hasn't been said or you think is important to end the presentation with? Maybe I'll go round. So Ivan, we'll start with you and then just go around with everybody.
Sure, thank you. Okay, so I think the best advice, for everyone is to start, looking for a financial advisor or a certified financial planner. And the reason why, because, financial planners, they look at your overall financial situation. We're able to see, like you have group benefits, what is it that you have? What are your financial goals that you want to achieve in the short term, like in the short term or long term? We also look at, what's the wealth management when it comes to investments, and also what we're talking today, which is the risk management factor. So if you're working with a financial advisor, don't only focus only on one single wealth, investments, or insurance. Try to look at the holistic financial picture of your finances. So when you're working with a planner, we look at, everything, and then try to make sure that you have a written financial plan. So a written financial plan is different that you walk into the bank and then you're going to buy a product is different. A written financial plan, you have like a roadmap for you to follow to make sure that you go step by step according to your financial goals. So my recommendation is, start looking for a financial planner. There are, tons of resources online. I think there is a website from FP Canada that you can search, for names and people who are certified financial planners, and you will be able to see, the people that maybe some bios and maybe that's matching. And even, through Sun Life also, we have the sunlife.ca, we have something called Advisor Match. So actually you want to, search online for Advisor Match at sunlife.ca website. You will be able to look at, who I want to work with. Maybe, you want to make sure they speak your language, and you want to make sure, maybe it's related to you, then you will be able to match it, with the person, that you want to work with. But get an advisor and get a written financial plan. That would be my advice to the audience.
Mathura?
Yeah, just to echo on what Ivan said, financial planning is something important that you need to do. It is, like I said, or mentioned earlier, it can be a very difficult topic for a lot of people, but it is important to have that conversation. On top of even financial planning, even having like things like a will in place, right? So oftentimes people forget about how important that is too. Yeah, so just start that conversation. Don't put it off to I'll do it later, because like I said, anything can happen. We've seen so many situations, and it's just better to be prepared. It's just a peace of mind to plan ahead.
Great, thank you. Jane, anything to add?
Yeah, so I just want to add, financial planning is not just for people, have lots of assets. Even though, you may have a very simple, investment accounts, or that you have a very simple family situation, it is still advisable to get a financial plan. One thing, because we talked about retirement planning, right? So one thing we can do is that, we can actually work backwards. You tell us your retirement goal, what kind of lifestyle you want, right? How much you need every month to spend during your retirement period. We work backwards and help you to calculate how much you need to save nowadays, right? So at least you have a goal in your mind, to going forward. So don't hesitate to reach out to a financial planner if even though you have a very simple situation.
Very good advice. Brent, do you have anything in conclusion?
So I wrote down two things when you asked the question in terms of what I would stress. I think there's a common theme here. One is have a plan, but my focus would have been, and I think it's been said, is the earlier or the younger you can get insurance in place, the better. It just makes a lot of sense in terms of people are generally healthier and have better access to insurance when they're young. So I would stress that. The other thing that I would stress is that insurance is a competitive market. Insurers will focus on different elements of insurance and may have different risk tolerances. And so really what I'm trying to say there is that if you have challenges getting insurance or getting insurance at a premium that you are comfortable with, you can always shop around with other insurers, whether that's you doing it directly or through an advisor. So those would be sort of the two points that I would leave with.
Great. And Anne-Marie, we'll end with you.
Thank you. I just want to mention twice home insurance has come up in the conversation with the panelists, and that's kind of my bailiwick. So I wanted to stress that if you're getting a mortgage, most lenders will require that you have home insurance on the property before they forward you any funds for the mortgage. So that's something to keep in mind. And another thing for those of you who rent, given that the rental market in Toronto and in Ontario actually is getting so competitive, many landlords are starting to require that the people that they rent to have tenant insurance. Just for you, tenant insurance is not very expensive. I did a little quote before we came on here. For $40,000 worth of your property coverage, it would cost around $300 a year. So, what is that, like $20 or so a month? So just keep those things in mind. I know it's a lot of insurance, but in my mind, better to have too much than not enough in all of the lines that we talked about today.
And just one question that has come in quickly before we wrap up is there a provincial, I guess, is it provincially regulated? So somebody is saying they live in Manitoba, so can they get life insurance from an advisor in Ontario? So are there provincial restrictions?
Okay, so I'll answer that one. So yes, there are, it is up, we're all provincially licensed. So you will need to look, for an advisor in your province who is licensed in your province. Now, there are advisors in Ontario that have different licenses in different provinces, so you can also check with that. But the best option, to go, to maybe the website to check, for insurance license advisors in your province, because it's insurance, is provincially regulated.
Great. Thank
Well,
you.
I think Paula has a question. Is that, did you have, no? No, okay.
Nope.
No, I just saw her hand, that's why.
Oh, okay. So thank you so much, everybody. I think this has been incredibly helpful for anybody who is looking to buy a house or life insurance and stressing the importance of life insurance, because I think people, I think we heard it a lot today, people are not comfortable with that discussion and don't want to think about when somebody passes away, but you've made it really clear that you have to. And I love, Ivan, I love your line that it's showing your love for those people that you're leaving behind if something does happen to you. So think about that as well. And I would think too, even thinking about those people that maybe not working outside the home, how much would it cost you to have the services that that person does, whether it's daycare or childcare? You may want a small policy on them as well. So thank you all for participating. I saw lots of great material coming through the chat. So hopefully everybody gets a hold of that information as well. And with that, we will close and we will be back in 2 weeks to talk about ETFs, something I actually will know something about. So this is good. Thanks very much, everybody.
Thank you
And
very much.
Thank you.
Thank you.
Bye, everyone.
Thank you for the invite.